I want you to ask yourself these 3 questions. Number 1, what do I want? Do I want to become an A student, or do I want to become an average student? Number 2, I want you to ask yourself, how do you plan on getting there? Are you going to put more extra hours, or are you going to just sleep? Number 3, who will be with you in this journey? Because it is important that we associate ourselves with students who have the same vision as us, who want to become a student, who want to put in the extra work, who want to become better at what they do. Unsuccessful people do not plan. They just let life happen to them. But successful people are planning on how they want their lives to be. And right now, you plan on how you want your results at the end of the year to be like.
Greetings, Grade 12 learners. My name is Mr. Simbi, and welcome to today's accounting lesson. In today's class, I'm going to be looking at the final revision for paper 1. And here are my objectives in today's class. All right. So the first one, I'm going to look at the structure of paper 1. I'm going to look at the structure of paper 1. And then we're going to look at the statement of comprehensive income. That is your income statement. We're going to look at the statement of financial position. We're talking the balance sheet. And then I'll also look at the cash flow statement. I'll also look at analysis and interpretation of financial statements. I'll also look at corporate governance and auditing. Let's go quickly now to the structure of paper 1. Here's the structure of paper 1. All right. So it is very important that when we're in class, we get to engage. All right. So please kindly tell me if you can hear me. Okay. If you can hear me, just tell me, Mr. Simbi, we can hear you. At least I would know that you are in class. Okay. Thank you so much. So we're going to start with the topics for paper 1. The topics for paper 1. I'm going to speak firstly to the topics that may be deemed as constant, the ones that may not change, the topics that may remain the same, the topics that may remain the same. Okay, so we're looking at the topics such as your auditing and corporate governance. All right, so I just want to encourage you again, if you can hear me, please quickly get in touch with me and just tell me that we can hear you. If you can hear me, just send me a sign to say, Mr. Simbi, we can hear you. Okay. So, as I was saying, the first one that will be constant is your auditing. All right. So this one will be constant. So you would find that in the past papers, in the recent papers, you will always find your auditing and corporate governance questions. Okay. So as I look at the structure of the paper, these are questions that we may deem as constant. Your auditing and corporate governance. Then we also look at analysis and interpretation of financial statements. Very key. We're going to touch on this one as well today. This one may have marks that range between 40 plus minus 40 marks. And then another question that we may also say is constant. It is your cash flow statement together with financial indicators. So your cash flow statement together with financial indicators will get you between 40 or so marks. So it's plus minus 40 marks. So these 3, we may say they are constant. We may say that they are constant. The question that may vary, the question that may change is the statement of comprehensive income and the statement of financial position. These are the questions that the examiner may play around with. For example, the examiner can test the entire statement of comprehensive income and the entire statement of financial position, or a part of it, the equity part or the assets section. So the examiner can play around with this particular question. All right. The next option that you can find is, remember, these ones would have remained constant, and the one that might have changed is that one again, where the examiner can bring the statement of comprehensive income and notes. So you have to know your notes from note 3 up to note 9. the examiner can bring the statement of comprehensive income with any of those notes. And then the next one is the statement of financial position. So you see, I'm looking at what can change. The bottom three may remain constant: your cash flow, your analysis, and your auditing. But this question one is the one that may change. And so we are on the third structure, where you can only have the statement of financial position as well as some notes. And then the last option, the fourth structure, is when you can have the calculation of correct net profit after tax and the statement of financial position. All right. So this becomes the fourth structure. Without further ado, let's go and start with activity one. Here is activity number one. Activity number one is adapted from the Free State June exam for the year 2024. And remember, we're preparing for paper one. Thank you so much to all those that are sending me message to say, Mr. Simbi, we can hear you. I know most of you were worried now that maybe he's been muted again. No, I've not been muted. We've just been having just a slight of technical glitches, but we're back on. Make sure you have your paper, make sure you have your pencil, your calculator ready, because we're going to start some calculations. And I promise you, I'm not going to be muted today. All right, let's go. Question one. On question one, here we are required to do the statement of comprehensive income, and the question reads, Rudo Sports Stores Limited. The information to the financial year ended 29 February, the company trades in various sports items. Refer to information B, number 1. Calculate the value of closing stock of golf balls using the first in, first out method. Very key. I think if you look at the structure of recent examination papers, in your paper one, the examiners are bringing in inventory valuation methods. So remember, we have 3 inventory valuation methods, namely your FIFO, first in, first out, your weighted average, and your specific identification. Now, the examiner can bring one of these and include it with the financial statements. So you have to know these inventory valuation methods before you go and sit for your prelim paper one, because the examiner can bring any of these to be included in either a statement of comprehensive income or your statement of financial position. So as we see here, we are given an extract from the pre-adjustment trial balance, and then adjustments and additional information. Now, I'm going to be reading it slowly and nicely so that you can catch up with me. It reads, a physical stock count on 29 February revealed stock of 1,192,600 on hand. Key, very important. However, this figure excluded the closing stock figure for golf balls. Note that the first in, first out method is used. So it means when we did the physical stock count, we did not consider this information. So what are we to do to consider this information? We need to calculate the value, because here you can see we have 1,900 units, but we don't have the rand value. We need to get that rand value. And in order to do that, we are going to use the FIFO method. Now, you know that when you use the first in, first out method, the number of units at the bottom here is 1,900. So I'll come here, then I'll say 1,900. If you have been following my classes, you know that this line is not a division sign. We are building. We want to construct the value. So I'm going to now say, when you use the FIFO, remember the bottom up approach, I'll look at the recent purchases, and the recent purchases are 3,000 units. So can I get 1.9 there? Certainly. So I'll come here, then I'll say my 1.9, then I multiply this by the price per unit. And my price per unit is 28. So I'll multiply this by 28, and then we need to get an amount. We need to get an amount, and the amount that we're going to get is 1,900. Multiply that by 28. That gives you 53,200. So I'll come here, and it's 53,200. So let's read the statement again. A physical stock count revealed that we had this stock on hand. However, that figure excluded the 53,200. So we need to include that amount. We are going to record, and the first place we have to go, we know that once we are given stock on hand, it speaks to our statement of financial position. So in other words, I'm looking at note 4, and I'll come here and I'll say trading stock. And I'll say trading stock. All right, dear learners, we're going to go again for another 1-minute break, and I'll come back to you shortly.
I want you to ask yourself these 3 questions. Number 1, what do I want? Do I want to become an A student, or do I want to become an average student? Number 2, I want you to ask yourself, how do you plan on getting there? Are you going to put more extra hours, or are you going to just sleep? Number 3, who will be with you in this journey? Because it is important that we associate ourselves with students who have the same vision as us, who want to become A students, who want to put in the extra work, who want to become better at what they do. Unsuccessful people do not plan. They just let life happen to them. But successful people are planning on how they want their lives to be. And right now, you plan on how you want your results at the end of the year to be like.
All right. So what we were doing, we're recording the amount that we've calculated, which is the 53.2, under our current assets. So we record it under our trading stock. So I'm just going to come here, and I'm going to say trading stock over here. All right. I'm going to say trading stock. And then I'm going to open a bracket. So you know this is the amount that I have in my trial balance. What I have in my trial balance is 1,253,000. 1,253,000. This is what I had in my trial balance. And I'm told that on hand I have 1,192,600. However, it excludes this one. So if I want my stock on hand, I should then say the 1,192,600 plus the 53.2. So we're just going to try and do that together. 53.2 plus the 1,192,600. And then that will give us now 1,245,000. So it means on hand, I must have 1,245,000 over here. So if on hand I have 1,245,000, yet according to business records, it must be 1,253,000. That means I must subtract something here. And to get the difference between the two amounts, I'll just say 245,800 minus 1,253,000. And then that will give me 7,200. So I'll come here, then I'll say minus 7,200. I know that once I have a minus here, I'm going to get a trading stock deficit. So you must be able to record in both the statement of financial position as well as the statement of comprehensive income. So I'm going to come here and I'm going to get my trading. I'm recording my trading stock deficit. Trading stock deficit. And you need to show calculations. And how did we do that? To get the trading stock deficit, we said 1,245,000. All right, 1,245,000. Then we can subtract our amount, that is 1,253,000. Or one would have said 1,253,000 minus this amount that is on hand, 1,192,600. Then minus again the 53.2 minus the 53.2. You would still get your trading stock deficit, which is 7,200. Calculations are very important. Tomorrow, remember to open brackets. Take amounts from the trial balance extract and remember to put those amounts in brackets. Another thing that I need to mention is whenever you see your answer book is shaded, do not write on those shaded areas and do not waste time trying to calculate amounts in those shaded areas. Once it's shaded, move on to the part that is not shaded. I'm going to move on to the next adjustment. And the next adjustment now reads, goods are sold at a markup of 50% on cost. So goods are sold at a markup of 50% on cost. During February, old stock costing 200,000 was sold for cash at 25% below cost. This transaction was recorded. So we are preparing the statement of comprehensive income and we have been given cost of sales. We need to get gross profit as well as sales. Now, we are told that our markup is at 50%. If I come and I take the 9,600,000 and I simply say multiply by 150 over 100, that will not be correct because there is old stock costing 200,000 which was sold at 25% below cost. So I need to take that into consideration. And in doing so, I'll now say the 9.6 million, which is my cost of sales, then I'll subtract the 200,000 because we are told here old stock costing, so it is also on cost, and therefore I'll now remain with 9.4 million. This is the cost of sales of the other stock. So for this 9.4 million, we sold these goods at 50% markup. The 9.4, we sold it at 50% markup. So I'll come and then I will say, multiply that by 150 now over 100. Keep your calculator close. All right. So we are going to say our 9.4, or we can start by simply saying 150 over 100. 150 over 100. Then we are multiplying by the 9.4 million. By the 9.4 million. And then it will give us 14.1 million. So I know that here I have 14.1 million from these goods. So I can come to my sales and I say 14.1 million. Then I'll say plus. I know that these goods that I subtracted, these ones with a cost of 200,000, they were not sold at a markup of 50%, but they were sold for cash at 25% below cost. So I'll now say that 200,000 multiply it now, not at cost, but at 25% below cost. That means I'll say my 100%, which is cost, minus the 25%. That will give me 75%. So I'll come here and I'll say we sold this at 75%. Okay, now let's quickly come to our calculator. We now want 75%. That is what we want. And we know that these goods had a cost of 200,000. So it would therefore be 150,000. So I'll come here, then I'll get 150,000. So I'll come here, then I'll say plus 150,000. Then I close it up. And then I'll end up now with 14,250,000. Then when I subtract my cost of sales, I'll then get gross profit, which is 4,650,000. Now, very important that the examiner can bring an adjustment like this, or they can bring an adjustment whereby there is a credit note which needs to be taken into consideration. You have to be able to adjust in both the statement of comprehensive income and the statement of financial position. One other aspect that I would need to emphasize is a business can be trading and a business can also be offering services. So you need to prepare yourself for a business that also receives fee income. All right. So you must do questions also that expose you to adjustments where there is fee income. I think you'll find past exam papers where they are selling as well as doing repairs. Therefore, they have fee income. Expose yourself to such questions. I'll move on to the next adjustment. Here it is. Audit fees. Now, this one is saying 85% of the audit fees have been paid. The examiner can change this in several ways. They could have said 25% or 15% or 30% has not been paid. So the examiner can play around with such. Okay. Because when we are preparing for the paper, we need to be able to adjust in both the statement of comprehensive income and the statement of financial position. So I would advise you to get the amount that has not been paid. If we're paid 85, it means 15 has not been paid. And what we have is the 85. And then we multiply by 166,600. Okay, so we want to know how much was not paid. Okay, let's come. So what we want is 15. And what we have is 85. And then we say multiply by 166,600. And then that will give us 29,400. All right, so it will give us 29,400. So I'll come here and I'll get my 29,400. So when I am now recording in my statement of comprehensive income, I'm now saying audit fees. Remember, very important that you open brackets and bring the amount. There it is, 166.6 plus 29,400. And then I know that this is what was paid, and therefore this was not paid. That makes it an accrued expense. So I'll come here under my current liabilities because it's a payable now. I'll now say accrued expense. Here I have my accrued expense in bracket. All right, I know I'm going to get others as well. So I'm going to have my 29,400. Okay. Are we okay? Please send those thumbs up if we're still okay. Thank you. Let's move on to the next one. And the next one reads, received 5,360 from the insolvent estate of a debtor. Okay, so this is one common adjustment that we may find where there is a debtor that was previously written off and then pays. That's the first option. The second one, where we have a debtor that we're writing off now, and therefore we need to record that. That's the second one. You must expose yourself to such adjustments. I'll repeat, where we had a debtor that was previously written off and then comes to pay, bad debts recovered, and then it gets recorded in our debtors control. Remember, that's an error. You need to expose yourself to such adjustments. The second one that I'll talk about is the one that we have here now, where we are told that we have received 5,360 from an insolvent estate of a debtor, Georgie Crook. His estate paid 80 cents in the rand of his outstanding balance. So we know that the 5,360 is the 80 cents. We know that 80 cents in the rand, 80%. The amount received was recorded. The balance of his account must still be written off. That is what we want now. So, in the 10 minutes reading time tomorrow, make sure that you read your question paper together with your answer book. They do not want us to record that one. No, we are being told the amount received was recorded. What must we record? The balance. So the balance is what? Remember, the entire debt was 100 cents, 100%. What we have received is 80. So we have not yet received the 20. That must be written off. Once we are writing off, we are talking bad debts. We still okay? Okay, let's go then. So we say, what is it that we want? We want the 20. We want the 20, the bad debt. What do we have? Remember to use the UK method, the Cremora. I don't know what you call it in your classroom. Remember to use that method tomorrow. What you want over what you have. I have 80 and I also have 5,360. Now, in rands, how much is this? Okay, if you can punch that in the calculator for me, let's do it together. So, we say, I want 20. What do I have? I have 80. And then we multiply this by the 5,360. And then we get 1,340. 1,340. That's our bad debts. We know the moment we have bad debts, we must come into our statement of comprehensive income. Then I say here, bad debts. All right, I open brackets. What do? Amount from the trial balance, I bring it down. There it is, 22,800. Can I go on? Then I now say plus how much? 1,340. So come in, then I say plus 1,340. Okay, I know that once I write off an amount, it will also affect my current assets, where I'll come and I'll take my traded. So I'm going to say debtors control here. I'm going to open bracket, and then I'm going to say 221,440. I then write off the amount, which is how much? 1,340. Because I've been told the amount received was recorded. So I mustn't worry about the 5,360. I record that one now. Are we okay? Now, this adjustment is normally married to the one that comes next, provision for bad debts. So it means once I hear them saying provision for bad debts, I must get the difference between these two amounts now. So I'm saying 221,440, 221,440 minus the 1,340. How much do you get? If you get the difference there, you get 220,000. Okay, so you get your 220,000. Now we are told the provision for bad debts must be adjusted to 8%. So I'll come here, then I'll say the 220, multiply that by 8%. Okay, so let's come to the calculator. Tomorrow, make sure that you take a calculator that you are always using. Please take a calculator that you are familiar with to class. So you say 220,000 here multiplied by 8%. That will give us 17,600. 17,600. Once you get to the two amount goes to the balance sheet. So I'll come here, then I'll say immediately minus 17,600. Immediately. We're together? Minus 17.6. And then once you're done there, you now need to record in the statement of comprehensive income. In the statement of comprehensive income, now we're thinking increase or decrease. Remember, when your provision increases, that's an expense. But when your provision decreases, that's income. How do you know then whether it increased or decreased? You simply say, last year, how much was last year's provision? 19,888. 19,888. Versus this year, we have calculated this year. There it is, 17,600, 17.6. So what do you see here? An increase or a decrease? That is a decrease of how much? Of 2,000. Say it again. 2,200. Okay. 2,288. Okay. Someone is saying, let's punch it together so that we can see it. 17.6. Okay. So let's say 19,888 minus 17,600. There it is, 2,288. So come here now, because it's a decrease, it's income, so I come to other income. Then I'll say provision for bad debts adjustment. I open my bracket, and then I'll now say 19,888 minus 17,600. And remember, I got my 2,888. Okay, so make sure that you practice on these kind of questions. Let's go on to the next one. Let's move on to the next one. Let's see, what else can we have? Okay, so the examiner can bring you an adjustment that has to do with salaries for employees. You must be able to do an adjustment that is to do with salaries, where you're given the gross, the deductions, and the net and the contributions. Make sure after this class, you go and search for such adjustment. The examiner can give you an adjustment that also relates to directors' fees, as we see here. And this adjustment comes in very many different ways, vast ways. So you need to expose yourself again to several types of director's fees adjustment. But let's look at this one and see what the examiner wanted. It reads, the company has two directors who were appointed in 2020. So we have two of them. Here is one, here's one. A third director was appointed on the 1st of August. There is the third one. The directors earn the same monthly fee. So I know that they all earn the same monthly fee. So should I say 1,056,000 divided by 3? No, that is not right. One director has already been paid for March. Okay, so in this case, we have a prepaid expense. Let's start. So the first director, let's assume that is the one we paid already for March. So instead of paying the director for 12 months, we have paid for 1 month more, making it 13. So 1 times 13. So this director was paid for 13 months. And the other director was paid normal, 12 months. And the new one who was appointed on the 1st of August was paid until February. So now you have to count tomorrow, make sure you take your fingers to class because you're going to need them to count. Okay, so we're going to count together here from August, September, October, November, December, January, February, the year ends. So 7 months. And then we say 7 year. Now, let's add everything together. Let's add everything together. So we're saying 13 plus 12, that's 25, plus 7, that's 32. So we've paid in total for 32 months in total. Okay, now, we know that this 1,056,000 is for 32 months. The 1,056,000 is for 32 months. Okay, so that means per month we're paying each director 33,000. Per month we're paying each director 33,000. Let's go now. In our statement of comprehensive income, we now say directors' fees. Directors' fees, 1,056,000. Then we now say it's a prepaid expense. We minus 33,000. And then the next one, we come under current assets. And then we say we have an expense that was paid in advance. So we call that a prepaid expense. We call that a prepaid expense. I open my bracket, and that is 33,000. A prepaid expense. Okay, so that becomes the adjustment. Okay, but you need to expose yourself to many different kinds of adjustments of this nature. Okay, let's move on to the next one. All right, the next one then says the monthly rent did not change during the year. So this is a rent adjustment. You know that there is many different kinds of rent adjustments. There's the one that you calculate rent based on the floor space, square meters. There's the one where it increases by a percentage. There's one where it decreases. You must prepare and make sure you expose yourself to many kinds of rent adjustments. Let's look at this one then. It says, during November, the tenant paid 13,500 for repairs to the premises. So the tenant, our tenant, paid 13.5 for repairs to the premises. He deducted this from his rent for November. All right, very key. As repairs are the responsibility of the company, the repairs were not recorded. The rent for March was received and deposited during February. Okay, so don't miss that part. Rent for March was received and deposited during February. Okay, so let's see. I think we're going to record in the statement of comprehensive income. All right, and then we're also going to record in the statement of financial position. Okay, let's see where we can start with this adjustment. We know that of the rent income, which is 259,500, the tenant did not pay the entire amount. It was less because he deducted. So it was less by 13.5. So it means on other income, I would come here and I would say rent income, remember from the trial balance, it is the 259,500. And this is not the entire rent amount. This is less 13.5. So I'll come and say plus the 13.5. Now, I have rent now for 13 months in full. Rent for 13 months in full. Why am I saying 13? Because we have received rent for March. Okay, so if we say 259,500 plus your 13.5, it will give you 273,000. So you get a 273,000 here. Okay, someone is saying, please show us how you get that one. This is what we said. We said 259,500, 259,500. Then we added the 13.5 that was deducted by the tenant for repairs. That is how we get the 273 here. Okay? We know that that is rent for how many months? 13 months. So we want to know how much is rent per month. So we simply come back again. We divide that by 13 months. And that will give us 21,000. So rent per month is 21,000. So we know that we have received rent for March in February and we deposited it. So that becomes income received in advance. So I have to come here and say minus 21,000 because I've received some income in advance. Minus 21,000. But under my operating expenses, I have to record my repairs. How much is it here? 53,100. Now, there are repairs that have taken place of 13.5. So I'll come then I'll say plus 13,500. Okay, thank you. Someone is reminding me that this 21,000 was supposed to be recorded in two places. Remember, your statement of comprehensive income as well as statement of financial position. So it means I must come now under my current liabilities. What do I say? Income received in advance. Okay, you mustn't write like this, you must write in full. All right, and then we say how much here? 21,000. It's a liability because it's income received in advance. Remember, the rent adjustment can come in different ways, many ways. Make sure that you expose yourself to all the other kinds of rent adjustments. Okay, I'm going to move on now to the next aspect. And it says 4,800 is still odd to SARS. Still odd to SARS. Now, this part of the statement of comprehensive income, the examiner can test it in many different ways. You must be able to read the information, understand what the examiner wants, and then start working. So here we're told 4,800 is still odd to SARS. And here we must get the income tax. We will come and get our provisional tax payments, which is 450,000. So we come say provisional tax payments, 450,000. Then we know that 4,800 is still odd. The provisional tax payments that we have made are less because after we paid the provisional tax payments, we are still owing SARS 4,800. That means we must come and add it plus 4,800. That's now going to give us 454,800. Remember, that must be in brackets. Now, how do you get that one now? You do the bottom-up approach. Okay? So remember, once you do the bottom-up approach, this is what you do. You want to get that question mark there. On your calculator, you punch the last amount, which is 1,060,800. Now that you are going up, you will change the sign. Okay, you change the sign. So instead of it being a negative, it becomes a positive. So you say plus 454,800. Then it will give you 1,515,600. 1,515,600. Now, this part of the statement of comprehensive income, the examiner can test it in many ways. They can come and say income tax is 27%. Then they give you amounts. So you must be able to understand that your net profit before tax would be 100%. Then your income tax would then depend on the examiner. And then you also get your net profit after tax. That's another way that the examiner can test this particular area. But another thing that we need to take consideration of is that in the statement of comprehensive income, the examiner can bring financial indicators that we have to complete certain amounts, and we must rely on financial indicators. These are some of the financial indicators that the examiner may ask. Okay, so remember, the 4.8 is also going to come here before I move on to the financial indicators. I'll also say here, SARS, income tax. All right, SARS, income tax, owed, a liability, 4.8. Okay, now we can safely move on to the financial indicators. You must expose yourself to statements of comprehensive income that come with financial indicators. Remember, we have also seen how we can use the markup percentage. All right, and here's your formula for the markup percentage. That is your gross profit over cost of sales. All right, over here. So you have to expose yourself to these financial indicators because the examiner can use either the first one, that is your gross profit on sales, or the net profit on sales, or the operating expenses on sales. Any of them, they may use the financial indicators in preparing the statement of comprehensive income. A missing amount, then you have to find that one. Or they can just say the sundry accounts, or it can be depreciation, or it can be advertising, becomes the balancing figure. So you also need to do a statement of comprehensive income that can have a balance. But again, I'll reiterate, when you see shaded areas in your statement of comprehensive income, do not write in those shaded areas. Or if you see shaded areas in the statement of financial position, you do not write in those areas. Okay, can we do activity number 2? So we've done activity number 1, where we were preparing the statement of comprehensive income together with the statement of financial position. Please, when you prepare, do it the way that I was doing it here. The second one that we're going to do now is activity 2, and here is activity 2. Activity 2 is adapted from the NSC November 2023 paper 1. That is activity number 2. Let's begin. In this one, we are going to complete note 7, your ordinary share capital note. But what I'm going to do is, I'm going to see how your note 7 affects your statement of financial position and your cash flow statement. You're following me? So we are already looking at the next possibilities. Statement of financial position being affected by note 7, as well as your statement, your cash flow statement rather, being affected by note number 7. You ready? Let's go. Okay. Information is very important, and when you read it, take note of dates. On 1 March, that is the beginning of the financial year, there was 1,200,000 shares in issue. You can see that one there. And the 7.2 million that was given over there. An additional 300,000 shares were issued. So we come here, 300,000 shares were issued. All right, and these are being issued on which date? On the 30th of June. 30th of June. All right, and then we are not given the issue price. Once that happens, do not worry, continue, and then you will still find it. On the 1st of December, 90,000 shares were repurchased. Once I hear the word repurchase, I quickly put brackets. Here's my brackets. Repurchased. Okay? So I'll come here, then I'll say 90,000 shares were repurchased. Do I know the price? I am told at 80 cents above. So I brought my triangle with. Okay, so the top part of the triangle is talking to the cash flow statement, and then the bottom, my left, it is the ordinary share capital, and on my right, I'm going to have my retained income. So we are told he paid 80 cents above more. So the 80 cents is going to go to retained income. So I'm not going to use it here in note number 7. Now, you must expose yourself to questions where they would come and say they paid 20% above. Get such kinds of papers and do them as well, as it will help you to understand what is happening. Okay, then here at the bottom we can get the number of shares now. So we're saying 1.2 plus 300 minus 90. That is going to give us 1,410,000 shares in issue. And then how much is it here? We were given the amount. Here it is, 9,306,000. So we come here, then we say 9,306,000. There it is. Now, very key, what I'm going to explain now. If you had the price here, you're going to get the average price much quicker from the top. If you can't get the average price from the top, then you have to get it from the bottom. If you can't get it from the top, then you get it from the bottom. How do you get it from the bottom? You simply take your 9,306,000. You divide it by 1,410,000 here. And then you will get your average price. And in this case, the average price that we are going to get is 6 Rand 60. 6 Rand 60. So I'm going to come here and it's going to be 6 Rand 60. So it's going to be 90,000 multiplied by 6 Rand 60. And then we would then get an amount that is 594,000. 594,000. Then to get that one, remember again the bottom up. So if we're going to do the bottom up, we are now saying the 9,306,000, remember that is what is at the bottom, plus the 594,000. The 594,000. Then we minus now 7.2 million. Minus 7.2 million. That will give us 2.7 million. So here we get 2.7 million. All right. Once you are done there, this is your note 7. You must be able to take information straight to your cash flow statement. Remember, issue of shares, repurchase of shares affects your financing activities. So you're going to come here and you're going to say, proceeds from issue of shares. Proceeds from issue of shares. Issue of shares. And then I'm going to say, how many shares did I issue? 300,000. If you were given the price, then you multiply. In this case, we are told it's 2.7 million. Okay, because we're getting that amount from our ordinary share capital note. Then, did we repurchase shares? So you come here, then you say, repurchase of shares. Then you now say, how many shares we repurchased? 90,000. You come now to the triangle. You need to get the cash flow amount. How do you get the cash flow amount? It is 6 Rand 60 plus your 80 cents. Remember, this is 0.8. So 6 Rand 60 plus 0.8. That is going to give you 7 Rand 40. So here it becomes 7 Rand 40. So you come here, then you say 90,000 multiply by 7 Rand 40. And then you will now get your 666,000. This is what you would do. We're going to take a 2-minute break, and then when we come back, I'm going to show you how to record in the balance sheet. I'm going to show you how to calculate NAV, and I'm also going to show you other more tricks. So see you in 2 minutes time.
I want you to ask yourself these 3 questions. Number 1, what do I want? Do I want to become an A student, or do I want to become an average student? Number 2, I want you to ask yourself, how do you plan on getting there? Are you going to put more extra hours, or are you going to just sleep? Number 3, who will be with you in this journey? Because it is important that we associate ourselves with students who have the same vision as us, who want to become a student, who want to put in the extra work, who want to become better at what they do. Unsuccessful people do not plan. They just let life happen to them. But successful people are planning on how they want their lives to be. And right now, you plan on how you want your results at the end of the year to be like.
Welcome back, dear learners. Remember, before the ad break, we had opened note number 7. And remember what I did in note number 7. Once I said repurchase, I automatically opened bracket. That means when I come to the cash flow statement, I must do the same. Once there is a repurchase of shares, remember that is a cash outflow. That is a cash outflow. Now, the examiner can test a number of other aspects on this area. The examiner can also talk about major decisions. They can say, mention or indicate the major decisions that were taken by the directors. Under your financing activities, you can see some of the major decisions. For example, if you look here, you can see that there was one decision to issue shares. That's one. A second decision was to repurchase shares. So when you look at your major decisions, remember we don't only prepare the cash flow, we can also be given the cash flow, and we also need to analyze it and take out information that the examiner demands. So when you look at major decisions that we made, we can also find some of the major decisions in the financing activities. In this case, the proceeds from issue of shares, we issued shares. The next one, it is that we repurchased shares. Okay, so I'm going to continue from here. Let's move on to the next one. Here's the next one now. So in the next one, in the statement of financial position, what would you record now? If you were doing the statement of financial position, it is just because here we were given much of the information. As you can see here, we have the ordinary shareholders' equity, which is 10.2 million. All right. And then here we're given the ordinary share capital. So you come here, here is your ordinary share capital. And the ordinary share capital is 9,306,000. That would then mean at the bottom, I'll have my retained income. So here you get your retained income. And if you get the difference between the two, that will give you your retained income, which is 894,000, which is 894,000. Okay, so you're simply getting the difference between that one and that one to give you this one here. Or you could have added these two to get that one. It depends on what the examiner has given you. But the examiner can also give you the net asset value per share, the NAV. And then they give you the number of shares in issue. Then you calculate your equity. So you must expose yourself to such a calculation as well. All right. Or you can be given the debt equity, or you can be given the debt equity. And you must then calculate your equity, then you end up with the other amount. Okay, so we're going to take again another 1 minute break, and then we're going to continue. Welcome back, dear learners. Unfortunately, our time in the studio is up and we have to stop here. But I want to encourage you to continue studying. I want you to go and look at your analysis and interpretation of financial statements. I want you to go and look at your corporate governance and auditing as well. And then tomorrow, exactly at 2 p.m., we meet again here. Make sure that you come here tomorrow at 2 p.m. and then we're going to prepare for paper 2, which will be written on Monday. But for today, please ensure that you go and prepare your statement of comprehensive income, statement of financial position, when you do adjustments to them in both, and then your corporate governance, auditing, and then analysis and interpretation of financial statements. Don't forget your tangible assets as well. Until tomorrow at 2 p.m. Goodbye.